Account sets determine the costing method, as well as selected general ledger accounts. The general ledger accounts identified with an account set are balance sheet related. Inventory control can maintain any of the costing methods displayed in the drop-down list. Moving average calculates the average cost as items are received, shipped, transferred, or adjusted. FIFO, first in, first out, or LIFO, last in, first out, keeps separate costing buckets for each receipt so the cost of the items can be maintained separately until the receipt bucket is fully exhausted. Standard cost indicates that inventory uses a specific cost for the item when it is sold, regardless of the actual item cost. If the actual cost is different from the selling cost, the difference is sent to the cost variance account. Most recent cost instructs the system to use the most recent purchase price for the item when it is sold, and the user-specified cost prompts the user to enter the cost when it is sold. All non-stocked items can use the user-specified costing method. Account sets also determine selected general ledger accounts. The inventory control account maintains the value of inventory in stock and increases when items are received and decreases when items are sold. The payables clearing account is a suspense account which inventory control credits when items are received. The reason this account is necessary is because transactions entered within inventory control do not automatically create the invoice within accounts payable, so the offsetting entry when the invoice in accounts payable is created reverses this account, resulting in the payables clearing account being 0. The adjustment roll-off account is used when inventory adjustments are posted, affecting the cost of an item. The assembly cost credit account is used when assembling items where fixed or variable costs are assigned. The non-stock clearing account identifies items as non-stock when they are added. This account is credited when non-stock items are shipped. The transfer clearing account is used if an additional cost value is entered when performing transfers. The shipment clearing account is debited when performing shipments instead of the cost of goods sold account. The reason for this is because the shipment and invoicing functions are separate within an order entry. When a shipment is invoiced, the cost of goods sold account gets assigned to the transaction, and the reverse is made to the shipment clearing account. The disassembly expense account is used if a cost is entered during the disassembly process of a previously assembled master item. The physical inventory adjustment account is an expense account that balances the change in inventory value when cost corrections are posted during a physical inventory count routine. And the credit-debit note clearing account is necessary to manage the accounting process because one side of a credit or debit note entered in order entry flows to accounts receivable, and the other side flows directly to general ledger.
Next, we'll take a look at categories.